Can you pitch me a stock and tell me the two most important headwinds and tailwinds?
Absolutely. The stock I'm going to pitch is called Lineage Logistics. Just a bit of a company overview, just for context. Simply put, Lineage provides warehouses for restaurants, grocery stores, fast food chains to store their food in cold storage. They basically make money by charging these food handlers for storage space. They're currently the largest player in the market globally based on square footage of warehousing space that they have across the world. And their closest public competitor is a company called Americold that comes in, at a close second. So that's a little bit of a company overview. As far as the industry setup, it's very top heavy. So you essentially have two players that dominate the entire market, right? Lineage has around 21% market share. Americold has around 16. And then after that, it's very fragmented. So you have hundreds of little tiny players that pop up in these kind of regional areas. And so that actually leads into your question, right? My first tailwind is that Lineage is a market share leader in a very, in an industry that's an essential service. So it's resilient to economic downturns and it has clear growth drivers. And it's really hard to gain scale in the industry, right? So from, the long-term growth drivers are very clear. Just rising population leads to rising GDP, which will ultimately lead to more food consumption and more demand for cold storage. But then secondly, the scale, right? This is a very commoditized business. So their customers, right? The restaurants, the grocery stores, they're really not picky as far as which cold storage company they go with. They essentially just end up going with whoever has the warehouses that are closest to their key end markets, right? And so Lineage isn't gonna, it's really capital intensive and time intensive for these other competitors to try to catch up. So from a revenue perspective, I think that rising GDP will add around 3 to 4% of revenue, and then price increases, which they are able to do because of their scale, will add another 3 to 4%. So I model out around 6 to 8% revenue growth. The second tailwind is the margin perspective, right? Because of the sheer size and because of all these tiny players that pop up, they can do a ton of M&A. So in the past 7 years, they've acquired 115 companies, primarily smaller competitors. And they're able to do that, right? Because again, they have the capital and they can then extend into all these regional areas where they don't already have a presence. And as they do that, they're able to make better use and more efficient use of all their factories and drive down, right, their unit economics. And so because of that, they can add around 1 to 2% of EBITDA margins. So those are the two biggest tailwinds, right?